has hands-on experience in the use of Excel, SAP, Power BI, Power Query for data analysis, financial modeling, data visualization, data extraction, reporting, and presentation. So he is currently um, he has worked at different companies from GZ Industry to Ban Gona to his last place of work before his current place of work. He was the group head financial planner and analyst and manager. So I don't want to go deep. He has is an ACCA member rather. He's qualified. He's an ACCA member with over 15 years experience in finance, accounting, covering manufacturing as a yeah. So he is the right person for the job. He's the right person for the job. I don't want to stretch it. I don't want to say, but he's the right person for the job. So I would like us to use our sticker, use our yes, we have a sticker, use our sticker, use the emoji, welcome Mr. Kodri Ade Abayo. Let us use our sticker, please, to welcome him. Yes. You can locate your sticker. It's like a smiley thing at the footer. Yes, you can use it all. Thank you very much. I've seen our sticker. Thank you. Mr. Kodri Adebayo, are you there, sir?
Hi, everyone. Good afternoon. Can you hear me?
Good afternoon. I can hear you, sir.
Hi, everyone. Can you hear me?
Yes, I can hear
Okay.
you. I can
My
hear.
video is on now. I hope you can see me
Ye-
as well.
Yes, we can use. I can see. So you can share your screen and you can go ahead. Before to you, sir.
Okay. Guys, thank you for joining this call, and it's nice meeting with everyone. I hope we are having a great holiday. So I'm sharing my screen now. Can you guys see my screen?
Yes.
Yes, sir.
Okay. Thank you for joining the call. So just after I've done a lot of introductions and just to uh more like put everybody in mind into what the expectation of this training is. This is just like a 1 hour discussions, which I even have less time to spend with you guys, so that we can have some time to talk about the questions. So, based on what I have on this slide, this is not like a training whereby you have to do practical, but this is like a preliminary to give you what is obtainable within the analytics part of finance and how big it is and how impactful it is and how business are looking for people with the right experience and the right skills and how what it means in practical. This will allow you to be able to identify the skill that you already have and those things that you need to probably like try to push up to be able to level with the right skills and have the right opportunity for yourself. So, as mentioned before by Alfred, my name is Kodri Adebayo. Some chartered accountant with a kind of necessary, and I have couple position with FMA and FMV as well. I've probably work across multiple industries, but spend large portion of my career within manufacture. But by virtue of I want to work on different projects, I have opportunity to work on agricultural sectors, manufacturing, healthcare, fintech. So while building a model and supporting the business, so there are a couple in my head, I can't really remember the numbers now, but I know I've worked for in consultancy capacity of work or different startup in Nigeria, supporting them in building a model, commercial support, decision support, and the like. So I have expertise in financial model analytics and strategic finance. So my passion is more around what trying to support the business with the right data, the right directions, and giving them a way how to make the right decision. So, like in every business, the leadership I always wanted to make decisions on how to grow the business and how to optimize the cost. So my role is to support and make that happen and give a direction of what can be removed and what can be had for business to grow properly. So it's my pleasure to meet with everyone this afternoon, and I hope we will be able to have real conversations, and after this class, we're able to make a decisions that will change our life forever. I believe you guys can still hear me, right?
Yeah, well,
Yes, we
Yeah.
can hear
Okay.
you. Yes, we can hear you.
Okay. So I'm moving to the next slide, in which I'm going to talk to you about the understanding of financial analytics 6. So what does this really mean in practical? Look at it in your day to day. Like before, accountants are moving from keeping records, observing the control, reporting on performance for previous performance, and you are moving on looking at those data to make informed decisions about future. So, which is why are we doing this? Is because the business environment has become more unpredictable, and things change so fast. So you as an accountant also have to be ahead of what is changing day in, day out. So if you look at it, whatever record you have in the past that you have put together cannot really, you can't change anything about it, but you can leverage on those things to change your future as a business, to change the business future, to change the business directions, and to make a right decision for the business. And that is why the business are now leveraging on existing data to know the key drivers, to know what is right, to know what is wrong, to know what to remove, to know what to add. So this is not like very important for sustainability of the business. So so that's how it is. So when you're talking about financial analytics, there are two things involved: use of data and tools. What are you trying to get with that? You're trying to gain insight into performance of the business, and that will guide your strategic decisions as you move forward. So those are the two things. You're talking about data, we're talking about tools. What are those tools? We're talking about using of Excel, we're talking about using of Power BI, you're talking about using of SQL, we're talking about Power Query, and many tools that's available for data cleaning up and data analysis. So those things are two things we have to get at: the data and the tools. What are we now trying to get? We're trying to get the past results and how predictive that could be, and what can we change? What are the drivers of those results? What are the things that if you go wrong, we are going to be in trouble, or if you go right, we are going to be in money. So those are it's simple way to explain to you what financial analytics is. So the concept comes with what we call a trending analysis, which are the key components. We're talking about forecasting, which is the process of projecting what your future performance will be. We're talking about freelance analysis. If you're in accounting, scenario analysis. So all these things are things that you're going to learn, you're going to know how to go about it, you're going to know how to impact the business. Why are we doing all this analysis? We are doing all this analysis to also be able to understand the current position of the business. There's something we call strategic triangle. In the triangle of strategic, there used to be like a strategic positions, the current position of the business. So you can't know where you are if you don't critically check where you are now. So which means you have a chance to look at where the business are by conducting those analytics using the data and the tools to know, okay, the business is at this point in times, or we're looking at the trend analysis, we're looking at the signal analysis, we're looking at the seasonality, we're looking at the how those things that drive the business. In most business, there are always a key drivers. So business does not just happen. Sometimes in the fintech, which has to do with customer acquisitions, number of customers is very critical to them. The more customer they lose, the more trouble the business is going to run into. In a manufacturing business, volume of the business is also very important. The price point is also important to for business to generate enough money to be able to meet all its obligations. So those things are also critical. So you can't know which one is the right. For instance, now, if you don't have understanding of your cost structures, you can't know the right price point for you to be profitable. So analytics, use of the data, use of the tools, we give you the performance and we guide your decision. So which means financial analytics is majorly like understanding the current situation of business, trying to look into those things, pick the learning and use it to guide your future decisions. Why is this important? It's an enabling proactive decision making. So you identify good opportunity and risk mitigation in business. So for you to be able to know that, okay, in the next 5 years, how am I going to be doing? You can look at what have I done in the last 5 years. So in as much as we know that past may not entirely like define the future, but one thing we should know is that future is also not going to come entirely from something that we don't know. So we have been in business for a longer year, so we know how our industry, we know those constant events that happen year in, year out. Unfortunately, year like 2020, nobody was expecting COVID-19, but it's just one of those things. Other than that, many other things happen that the business are aware and they are able to manage it. So, and looking at that system of 2020 as a year, it shows you that business that are prepared and quickly see the possibility of not being able to sell out, take actions to remain business and continue to strive. So those are those things. There are things that are going to be outside the control of the business, but that doesn't mean you shouldn't plan. That doesn't mean you shouldn't study your growth. That doesn't mean you shouldn't study your performance to be able to make a proactive decisions and also identify growth, identify opportunity and risk mitigations. So all those things are the opportunity you are going to what came from learning how to analyze a financial data, put inside to it, advise your management. So if you are somebody that have the insight, have the knowledge of business, have proper business acumen to be able to advise your business, and you are doing all these things for the business you work, you are going to be extremely important person because you point out what the business is doing right. There's something we call cost optimization. So you can't know how to optimize a cost if you don't know how to go about what are actually the cost structures of a business. So those things are important for you to be able to like make an impact where you work. If you have this knowledge and you are very deep in it, you are going to be extremely important because you are telling the business what they need to do to be to do business better. So one key thing I can tell you is this: in accounting, some of you agree with me that there is always an asset, and at a point in time, asset will reach where it's not economically viable to continue to repair those assets than to replace. So you, as somebody that have insight, you can look at, okay, this asset we have been holding it for last 10 years. At this point in time, the cost of replacing it is actually better than repairing it. So sometimes business lose track of those things because there are many things that they are looking after. But somebody that look at the past data and look, okay, this, if I've replaced this machine in the last 5 years, I could have saved $20 million or $50 million or something like that could happen. But you can't know those things. You can't know where money are going now without any benefit, without doing analytics of the data and making an inside conclusions on those things. So it's more like putting your head into data. More, it sounds like a research, but it's not like a research. But you're just looking for a way to do a business better. This probably going to give business a competitive advantage. There's some industry now, the price point you can't possibly change it. A beverage industry like where they sell Coca-Cola and the like, Coke seems to be like a business leader in Nigeria. So other business that are not that are not market leader cannot entirely change the price unless there's a shift from Coke to move. So, but they can go inside, look at their cost structures, control the cost, and make better margin than Coke. So it's possible. So, and also in business too, because you're outside, you don't know which of the business product that is making money or which one is making loss, and business continues to produce. So there are decisions that are being made in business that are not entirely open to consumers. But when you're there, you will know why business do some things and why they don't do some things. So that's why understanding the financial analytics, the concept around analysis, scenario, trend analysis are critical and very important for the business to grow. So that's just the point about this slide. So that being said, I'll move to the next slide. So why is financial analytics important for business growth? Improve decision making. Like I said before, you can't know how to, sometimes you don't know where to go when you don't know where you are. So it's always when you do the analytics and you put your hand into it, you try to understand how the data happen in real life. You know where support is required. You know where to sell your machines. You know where to buy a new one. You know where you need to run a business as a capital-intensive business or a people-intensive business. You know when to expand to different locations and how to expand. So all those things are going to come from your experience because if you are a business that comes to Nigeria and you trade greatly in Nigeria, you have an insight of having a bit of understanding of what's happening in West Africa. And you know how to enter Ghana, so you know how to enter other West African countries. So all those things are going to come from the fact that you have information around the market in which you are operating. Let's say it's a new business that you have never been there before. you still have to spend money on understanding the market and how big market is and how profitable the market is, and if there are opportunities to do what, to make more money for the business. So the aim part is that when you do the analytics, you make an informed decisions, a real-time insight on. So, and also analytics give you the critical part of your business, give you an insight on the critical part of your business. In all business, it can be from the point of customer or point of the product. Some business have one product that contributes 80% of their business. So you can see how big it is. If that product has problems, every other thing will be in trouble. But they need to have an information around how all the products are performing, so that they can know the products in which they are to deploy more resources into to continue to sustain the business. So looking at data, checking the product profitability, checking the customer profitability, checking location profitability, all these are going to come from the point of analytics. So it's going to give an insight to you, okay, this is the customer that gave me a big margin. This customer has to stay with me. Losing this customer means I'm not going to be in business anymore. So, which means if you have 1,000 resources and this business is giving 50% of your money that you're making a year, you deploy more of half of your resources to that to continue to ensure that the business from that area continue to be with you and you're not losing track of the important aspect of the business. So the other impact is coming from efficiency and profitability. So business, there's no business if you're a business, there's no profitability. So business is to make money and run efficiently. So one of the things analytics can do for you is that cost efficiency is very important. So you need to be able to that you are producing the best product in a cost-effective way, like the most possible way, quality product at in producing at effective way of manufacturing the product. So that needs to do what you need to be able to make the decisions. And when I'm talking about how efficient or effective is it, I'm talking about ensuring that you having the right people, having the right machines, and having the right formulations, and having the right packaging material. All those things are the things that business is going to make a decision to ensure that they drive cost optimizations. If you can produce cheaper and sell higher, it makes sense for you than produce higher and you're unable to make money from it. So those insights in the inefficiency around the costs and operations of the business can only come out to your eyes when you track the labor turnover, you track the ideal time, you track lost hours, you track production waste, and you track all those metrics that you track raw material conversion, you track conversion cost in manufacturing. So all those things are things that give you an insight. For instance, now there'll always be a standard. There's always going to be a standard output that a
Yeah,
manufacturer.
sorry, sir. Mr. Kodji, this is Alfred. Sorry to call you. Yes, so somebody sent, Ruth said, please, sir, can you share the slide you're talking about? Because your mouse is just on the first slide. And yeah, somebody said, are we still on the same slide? So we'd like you to keep moving to the next slide while you're taking us through everything, sir.
So I don't know. I'm looking at the slides. Can anyone see on my screen? I'm looking at the impact of financial analytics on business growth.
Yes, I can see it.
And that's what I'm showing from here.
That's fine. So when you just go to the next slide, please just click down so that you can be seeing the next slide, sir. Thank you, sir.
Okay, so I'm still on that same slide. I'm talking about number 2, which is efficiency and profitability. So efficiency is just important to the business and to do what to track profitability and ensure that business is being operated in a way that is cost effective and inefficiency in cost are being minimized or if not reduced, if not eliminated entirely. So that's also important. And also, what are you going to gain from analytics when it comes to competitive advantage? When you have information about the industry, the data, and what is driving the cost, you know how to go from there. You make actionable, intelligent steps to be able to beat your competitors. So at the beginning of the business, some costs are actually static costs. Yeah, whether you produce one product or you produce 3 products, you have to incur those costs. So before you reach the level we call economic of scales, so you whoever have information around how to operate that industry, the way to go about the cost, to structure the cost, to manage the business operations, we have a competitive analytics. So which means analytics data can also be what? A competitive advantage to you, because for instance now, one of the things business are into B2C, which is B2C, which is business to customers, is to understand customer intelligence. So if you have information around how customers behave, the time to do proper promotion, the time to introduce proper, to put proper promotion, the time to do discounts, all those things is going to drive your business, which means understanding all those things, having the data to back it up, having the data to introduce bonus, to introduce discount, to introduce promotion at the right times, is always going to give you a competitive advantage, which means you are doing things at the right time before your competitor take decisions to go to do the same thing. You have already moved forward. So I'm moving to the next slide now. I'm talking about key financial metrics and KPI. So, and I hope that's what you're seeing from your side as well. Hi guys, can you see?
No, please. Yes, we cannot see.
Okay, so that's fine. So, okay, so this is just to give you an overview of financial metrics that business track and how those things means. I'll just not bore us. I'll just talk through it. So I've mentioned I've talked about financial analytics. I've talked about the impact, decision making. I've talked about the efficiency and profitability. I've talked about competitive advantage for the business as well. So in metric that can business have something that they can track revenue growth from year on year. How am I growing year compared to last year? I also track what the trend analysis to see how the business is moving up and down. It can be yearly trend, it can be monthly trend. So we also mention seasonality and also the growth of the business. Seasonality is to know that when to know the calendar of the year that is critical to your business. A business like a beverage like Coke now, during the rainy season, they sell less. And during the festive period like December, January, which Ember month, October, November, December, it's like they sell more like as high as 35% of their sales for the year in this period. And also during the time that Muslims are doing their festive period is also like a key month for them. January is also like a key month. So which means each of the product that the business is selling has the time at which they're selling. So those time at the time to do the right promotion, to enter market, to do all those things. Business needs to understand those things. So, and you are going to be able to know, okay, what seasonality in a 12-month calendar in a year, there are 4 months that is critical to our business. These are the months we sell at least 60% of our products to make money. Why the other 40% is spread over 8 months. You can see now you are using out of 12 months, business is using 4 months to sell 60%, which means they are majorly deploying around 60% of their resources to those months to ensure that they actually any attempt not to optimize sales in that particular month, it's like they have mixed the year already. So they put in those things into it. So there's also cost analysis that has to do with variable cost, fixed cost. This thing also important. Business track the contribution margin and break-even analysis of their product. So these things give an insight of okay, what's the contribution of my product to my top line? So what did I need to sell to make zero profit? So all these things, business track it. They know that okay, at what point if this product is not doing anything, it's not contributing anything for me again, and they're not making anything on it. So it's so deep that business have to like make all these metrics. So all these things they are generally tracked by different people in finance. So the cost can be the cost big analysis can be with somebody in FP&A and financial analytics. Revenue growth can also be somebody who is reporting. So when it comes to risk assessment as well, they look at the sensitivity analysis of certain things like FS rates, how sensitive is the price point. So the price index is also important. They also track it because of the fact that if you price yourself too high, people are not going to buy your products. Do you get it? So business run different way. They go to market with different price, and they go to the market to the right price. So pricing conversion is always very dicey. If you're not the market leader, if you put yourself too high than the market leader, nobody's going to buy your products. That is it. And in a country like Nigeria now, we make a lot of decisions with price. To get so we are not really like our consumer behavior is not really like selling with the value, or more like trying to tell people why you are what you are offering is better than the other person by place of product differentiation, product value. It's always very difficult for Nigeria consumer to understand that. But when they look at your price to be 10 naira, somebody said selling some 750 kobo, so they are likely going to buy the one that is cheaper. So that's very decision. So when you now have the same price with the person or with the cool company has the same price. That's the point at which the business will now, okay, why am I buying this? Why am I buying this? So some of people, they don't mind buying it or this. Some people will just prefer that for the part of customer loyalty, they will buy your product and they continue to buy like that. But any attempt to sit away from the same price, they will stick to the next available substitute product. So business track those ones too. Their performance like EBITDA, RI, ROCE, cost conversions. So these are things that drive the business, and business used to measure how they are doing. But one thing I would like to leave with you on this particular slide is to know that business want to do one thing. They want to make money. So which is from the point of revenue. So they want to use those revenue to produce certain thing, which is the cost. They want to know how they are doing what, how they are paying, all the money that all the goods they sell, they're coming in. Am I getting my money on time? Which is more like what I pay, I sell and I get the money, and how they are paying their how they are paying whoever is selling product to them. So business is more around profitability and as well what at cash flow of the business. Business can be making money from profitability, but the business can still die if you are running on cash flow. So there are also going to be additions of the cash I need to pay at this point in time. So that they can meet what obligations that drive the business. If you are making money but you don't have money to buy more inventory, you are going to be out of the business. If you're making money, you couldn't pay your vendor, people who are supplying goods, you are going to be out of the business. So these things are basic things to know that business want to do what they want to sell at a profitable price, pay their vendor at the right times, and pay salary at the right times, and do all those things at the right time. So for them to be able to do all these things, they say metric like payable day, receivable day, payable days, receivable day, inventory days to manage working capital. So in management of working capital, they do what? They try to ensure that the capital they invest in working capital is at optimal level, and also they look for source of funding. We have cash gap. Do we need to raise this money through capital investment? Do we need to do this through loan investments? So loan is better than share capital. At this point in time, loan is not better at this point in time. So business need to make those decisions, and there are always going to be 1,001 decisions that business need to make, which finance is going to be the one to support. So when you think about your role as somebody that supports business to grow, you know those things are critical to business. Do you get? When you think about it, you know that those things are critical to what business. There's no business that is running without making money, or less than an NGO. Do you get? But a commercial business that is pushed to make money and increase the value of the shareholders are going to be towards making money. How are they going to make the money? To set the right price. How are they going to make the money? To produce at the lowest cost possible, but quality products. How are they going to make the money? To ensure that they don't put so money on inventory, they don't tie so money down in receivable, they don't own people than necessary. You guys, all those things are like a simple way to understand what the business pursued. So all these things is probably going to now translate to what is income statement, what is balance sheet, and what is cash flow. So that's what I'll just leave with us here. So now I'm moving to the next slide, talking about financial modeling fundamentals. Somebody can confirm when you can see my screen. I've already moved to the slide.
Not yet.
Financial metrics and KPIs. it just allows some time. I think maybe there's time lag, but I'm already on the slide.
Okay, sir. You can also zoom it so that we can see it proper. Thank you.
Yeah, I see it now. Okay, you can see it now. Okay. Okay, so let's talk about financial modeling fundamentals. This is just more like a quantitative representation of business performance, financial performance. So the model is just more like it more like a structural tool to forecast business performance for 1 year or more than that. So, and there are different things that drive it. So, what some people talk about, I'm building an annual budget, I'm building 5 years business plan. Yeah, all models. I'm building a pricing model to make decisions on the right price to do. It's also a model. So that's how it is. It is just more like a structural way of what you do in real life, and you put it into what quantitative way, quantify the volume, the price, the cost, the salary, the interest rate, all these things, and use it to form what income statement, balance sheet, and what and cash flow, so that you can project that, okay, at this point in time we need this money, I need to sell this, I need to expand to this country, I need to be in this country, I need to introduce this product. So all those things are more like it's more like a simple way to explain the model. It's just a quantitative view of representation of business from financial performance. So that's what financial model is, and it's always the most common. When I get to the key point, I will talk about that. But there are different type of models. I possibly cannot list everything here, but there's budgeting, there's forecasting. Budgeting is more like a financial plan for a time frame, maybe 1 year, maybe most times talk about budgeting in 12-month calendar to get. And when you're talking about forecasting, they talk about it more than a year. So that's it. And also business valuations is also a model. Scenario analysis to know that in modeling there used to be like 3 scenario. Business look at their performance from base case, worst case, and best case to know that, okay, let's see. And why they are doing this thing is that they are looking at different point of what if I grow in 20%? I've always been grow 20% in the last 5 years. So I can continue in that way. That's like my worst case. I'll always manage to grow what 20%. That can be my worst case. And I can also I can say I want to grow at 25%. So that can be my base case. And I can grow at 20 and 50%. That can be my best case. So all those things are put together to be able to come up with what we call a scenario analysis. So model, that is budgeting, that's forecasting, that's valuation. There is a scenario analysis, there is buy or make model, there is pricing model, there is something that actually can be investment appraisal is also a model. So all join their financial model. So, but what most people know is always 3 financial statements: income and balance sheet and cash flow. Why these 3 are important? Why these are more like the output of the model most of the time is because every other models, by way or the other, have a relationship with those 3 documents. Sometimes it can be cash flow and income statement alone. It can be balance sheet involved as well. Sometimes balance sheet may not be involved, but income statement and cash flow is always more present when you're talking about investment appraisal, when you're talking about business valuation, when you're talking about scenario analysis, when you're talking about forecasting. So because why I'm here forecasting, I'm forecasting to know the performance of the business in the coming years. So that's why all those things are important to the business. So the key component of the models are what? Number 1 is assumptions. Assumptions are the key drivers of the model. So in an assumption sheet, we show you the driver of the model. For the manufacturing sector, you're going to see volume, you're going to see price, you're going to see different type of productions, you're going to see the cost of producing one unit, you're going to see number of the volume they want to sell, you're going to see number of people per line, per machine. It depends on how deep, how detailed the assumption sheet. You're going to see the fund that the business is trying to raise, how much are they trying to raise it in interest cost, the number of years they're going to pay back, how they intend to fund the working capital. All the things are going to be in the model assumptions, which is going to be what? A driver for financial statement. And financial statements are income statement, balance sheet, and cash flow. So they're going to be a supporting schedule. Supporting schedule is what is basically where the calculation is happening. So you can, if you go online and you Google assumption sheet, financial statement, supporting schedule, you will see how it looked like. It's vary from one industry or the other it's free from one industry to the other. So when you're looking at a model bit from manufacturing and when you're looking at it from fintech, it's not the same thing. And why it's not the same thing? The business model is different. The output can look like the same thing, but more like you're going to be revenue, they are going to be cost. But if you agree with me now, if you look at fintech now, like bank, for instance, bank is not, they are not into production of making goods. They lend people money and they make money on that. So which means in bank now, for them now, one thing that is more money for them is what? The interest income that they gain from the loan that they give out, and the interest cost from the loan that what they lend out. You know, they borrowed from somewhere because bank also borrow money to do business. So that's so which means you will see the same way the financial statement of each of the business is not the same thing. Manufacturing is not the same thing as what? As bank. Sometimes agriculture is also not the same thing as manufacturing. So it's the same way the model is not going to be the same thing. So the more project you have chance to build on, the more you'll be able to know how it works in manufacturing, how it works in fintech, how it works in agriculture. So one of the best practices is building in what is dynamic structures model. So model that you build in a way that if I change something in assumptions, every other thing works well. So there's going to be an error check to see that clearly there's error there. Your model has to be clarity. You have to have auditability, which means somebody needs to be able to walk through your models. These are basic best practice when you're doing when you're putting a model together. And the key thing for you is that look at it this way: the model is more like a tool. It's the same way you prepare management account every month. It's like a tool as well, in which you structures, you multiply numbers, you use certain assumptions to prepare 3 income statements. And the generally component of the model is always assumptions, the financial statement, and the backup schedule. Schedule is what? Is the working sheets that fill into financial statement. So that's basically what it is. And the more you understand the business, the more you know how to go about modeling. If 3 people solve the model and they send it to you, the structure is not going to be the same thing, but most likely you're going to have the same output. Do you get? So which means everybody, there is no governance like the way they say that this is what IFRS 15, IFRS 19 talked about in accounting. But in model, your experience, your expertise, your exposure will determine how good your work is going to look like. So, but there are basic things you need to follow, which is more like you don't make the model too complicated, you make it simple, you make it in a structured way, you put the check to error, you make it, you build a model with clarity, you make it auditable so that if somebody's checking the model, they can understand what you're trying to do. So that is what differentiates bad model from good model. So those things are important in fundamental modeling. So like I said, this is giving you an oversight of how exciting this modeling is and why you need to deep into it and understand the best practice, how to go about it, how does it work in power, how does it work in manufacturing, how does it work in agriculture. So those things you can't possibly imagine it until you are there, until you have a knowledge that is enough for you to be able to say that, okay, I know those things. So I'm moving to the last slide before we for me so that we can move forward. So I'm showing a slide that I don't know if you can see. I've moved from the slide that I'm talking about, which is fundamental of model. I've moved to data-driven decision-making finance.
It doesn't show yet, but we're just gonna wait.
Yeah. So just let me know. So just.
Okay, so while we're waiting, thank you very much for joining to this section. We'll be rounding up soon. So while we're waiting, I've dropped the message. If you check the in call message section, I've dropped the message there. So to get access to the recordings, because we have a lot of people that we reached out to, there is a form there. Just click on the form. Then fill in your name, your email address, then you get access to the recordings at the end of the session. So over to you, Mr. Quadri. Thank you.
Hi guys, can you see the slide now?
No, it's
No, it's still showing the previous one.
For real?
Okay.
now. It's
It's
is it?
out.
Okay, so let's just quickly run through about it. I've already talked about a lot of things when I was talking in previous slide. So just to tell you that the role of data, you get, it's just make it easy for you to like monitor business performance in real time and strategically. You have to be like know what data is doing for you. So you look at the past to be able to make informed decisions in future. So there are several tools to do this. The most affordable and cheaper and mostly used is Excel. So Power BI is more like a what? It's basically data, a tool to present data. It's more like a presentation tool. That's what it is. SQL is also a data cleanup uh, software that help people to structure data in a certain way and run calculations like Excel as well. ARP, which is the enterprises reporting uh, tool, which is more like all this what they cover as ERP is integrated software like SAP, like I think Sage is also an ERP. Um, I think there's Pitch, there's Odoo, different kind of software that we use. So they are also it too. So all those two are, if you look at it now, if you want to ask for historical data of the business, you're most likely going to see it inside the ERP. But that's where the accounting transactions are happening, and that's where the records are kept. So you are going to see it there. So that's basically what this slide is talking about. So some of the cases examples that you have talked about the pricing, strategic pricing, capitalization, on capital optimizations. I've talked about this. So all these things are driven by what? By the data available. If you look at your inventory status, that's why you can know that okay, I've invested so much in working capital. I need to find a way to deplete inventory to have more cash with me. So if you are looking for cash in business, there are many areas you look at before you do what, before you even say that you want to go outside. Okay, I needed cash. I have inventory. So can I sell? Yes, I can sell. I could go and sell to have cash to something else. Oh, selling is actually very difficult. What they have money, I have money sitting in my receivable. Oh, somebody is owing me money. Can I push to get money from them? So okay, if I can get money from people that are owing me, why not? I will use the money to settle obligations. Oh, it's difficult. They are struggling. They don't pay. Okay, well, what can I do? Oh, can I buy on credit? Okay, let me talk to the vendors. I want to buy credit and pay in 30 days, so that we bought 30 days. Whoever is owing you, most likely could have paid, or you could have been able to convert your inventory to cash. So all those decisions is coming under what? Working capital optimization. So if you have to make all these decisions, you may have to guide somebody in treasury that please let's play with this, do the cash flow, let's ensure this customer pay on time, and let's ensure we pay this due money to the bank at the right time. Because any money you don't pay to the bank at the right time, bank charge you more money on interest. So it's a loss on the part of the business in terms of profitability. So you have to ensure that you pay the right interest rate and you pay the if you don't have to pay, you can also make a decision around refinancing of the loan, which another business decisions that business also take when there's need for that. So all these things are easy to do when you understand the business and data has to back it up. I think for me, this is more like the end of my presentations to you. If there are questions, we can discuss. Guys, thank you for listening.
Yeah, so can we appreciate Mr. Quadri using our emoji? Can we appreciate Mr. Quadri using our emoji as stickers? Yes. Thank you very much, Mr. Quadri, for that insightful section. I know this is like a tip. There is still more. There is still more, but there is still more. So, do we have any question, Phil, for Mr. Quadri? Because I have some questions here. I'll just be picking random, for Mr. Quadri, maybe one or two questions. So, do we have any question for English? Any question in regards to analytics, modeling? Oh, I can see that dancing. Oh, thank you for the great section. Okay, so like I rightly said earlier, for you to access the recordings, please go to the chat section and then kindly sign up. Yeah, kindly drop your email, fill it, and drop your email address there, so that you can have access to the recordings of today's section. So we'll be running off soon. Do you have any question for Mr. Colgate? If we don't, I think I will just go ahead and ask my own question. Do we have any question?
Yeah, feel free to ask questions. Let's talk.
Okay, so let me ask my own question then. So I have some questions here, and one of the question is, would like you to talk about what are these major major challenges companies face when trying to use financial data to drive growth? Like, what are the major challenges that companies face? Yeah, is there any challenges? What are those challenges that you'd like to share, or just major challenges that you have even encountered or you've tried to resolve, or other people in the industry pass through or go through when trying to develop things around business growth?
I think so. Maybe over time, this particular challenge will be solved by a business, but it's always a problem when business try to make decisions and they want to look back in terms of the historical data. So, because of the way business have choose to structure their reporting and how they have been able to break down some information on their ERP, so it's always putting the limitation to how much they could do with the data, so or to make an informed decision. So what I mean is this: some business don't have visibility around who is the best customers, what's the customer contribution to their performance, how, what are the key things that the customer they can give the customer as an incentive to be able to buy more from them. So it's and the reason why they don't have these things because at the point of deploying the softwares, they are not thinking that those things are going to be necessary for the business. So about the business continuing to grow and they need to be making some decisions and they need to back those decisions with right data. So going back to look at the historical data, those things are close to impossible to get. So and also sometimes business may not have people who actually look at in terms of how business is going to be looking at each other, looking at itself going forward. So a business that look at itself from the point of, okay, I just want to see my revenue and gross margin, nothing else. So they are not going to try to deep dive to anything that has to do with checking product profitability or customer profitability, all those kind of things. They won't check it because their focus are not checking that. They are surely going to run into a problem one day unknowingly.
Wow. Thank you very much for that. So, what are the key components of building a strong financial model? What are the key components? Yeah, this is my last question before we go straight to
So,
somebody
so,
somebody who's asking question. Go ahead, please.
we talked about it during the slide, and I mentioned to you
Oh,
the three components is more around the assumptions, which is the seed that drive the model itself, and the output of the model, which is financial modeling, and which is financial statements, and the last one is the what we call the model schedule. Schedule is the one like so. Look at it this way: the assumption is that this is the model input where you put all your assumptions. The second one is financial statement, which is more like the model output. And the last one is the model schedule, which is the one that is more like the engine where the calculations and all those things that is inside the output happened, and most like people don't see that, but they see the input and they see the output. But the last sheet show you the calculations of how you arrive at the numbers and how you do the multiplications and mathematics that happen in financial modeling.
yeah. Thank you. So we have some questions here, and that's all the question I have. So from Adam Singh, he said, "Thank you for the great session. As someone from a tech background with no financial knowledge, should I learn any basic before the program starts, or will the training cover key component like financial statement?" Yeah. So the training also covers some key aspects regards to this. Yeah. So let me just raise another question. What are the common mistakes beginners make in financial modeling? That's from Tenita.
Oh, okay. So the thing is that what are the common mistake? So the mistake are most likely going to so I think I would put that what are the common mistake that most people makes while trying to learn. Do you get? And so it's more like trying to learn in a certain way that whoever is taking you through the class, other than trying to learn the fundamentals of what you are doing. Like I said before, in the training now, I may not be able to if I'm the one training, I will not be able to talk about the entire industry. Do you get? that you were likely going to work and do modeling. But I'm most likely going to talk about what are the rules that guide everywhere you works. So which means if you don't pay attention and you're trying to learn the way I'm doing my thing, you don't try to understand why I'm doing those things, you are likely not going to be able to do well when you switch job or when you are talking to people in areas that you have never heard before. Do you get? So for someone like me now, let's say I'm not working in an industry, I have a job interview to discuss a role that has to do with financial modeling. So I'm most likely going to go there and talk to them as if I work there. What am I going to do? I'm going to check what are those things that change situations for them in that industry. What are the key numbers? What are the most important things to them? So all those things are available online. So because I know that what I've learned before is not what's applicable in banking, so I will go there and check that, okay, what are they calling revenue in banking? Do you get? Revenue in banking is basically the interest income. Do you get? So what are they calling revenue in software as a business? Or what are they calling revenue in fintech? Because fintech is not bank. They are more like a gateway business. So a parent gateway business. So all those things are going to be the key thing, is that not only learn the way whoever is taking you through course is saying it, but try to get what are the things that I need to look out for. Because the more projects you work on as a financial modeler or financial analytics person, the more exposure you're going to be. So if you work on 2, 3, 4, 5, 6 projects, you will see you can resort, those actions can resort to learning 7 new skills. You get, and how to handle conversations in those areas. So that's it. Just focus on learning the fundamentals. It's critical to succeed.
Okay, thank you very much. We have 3 minutes to wrap up. Okay, we have another question. How different is it to build a financial model and value an early startup compared to an established company? I'm trying to, how different is it to build a financial model and value an early startup compared to an established startup? And he also has another question. Can this program help us into transition into roles like VC, private equity or investment fund? What steps or skills should he focused on to make this transaction coming from somebody without a tech background? I think that's the apex for him to get into VC, private equity and investment fund. I think that's the apex for him. But those are his questions, so we can go ahead because we have less than 5 minutes. Once it is 3:15, we should wrap up with this section. Thank you. Over to you, please.
Okay, so just to establish, for instance, now early stage startup and comparing with the established business and building a model for them. The early stage startup, one thing I can always tell you is that the business is always going through different phases. So, and they normally don't have the data to like tell you how they want to go. That's where the skill of modeler will come in. So you're talking to somebody, you're talking to a funder now. Your funder does not even know what a financial modeling is. That's how funny it is. You get, if you're talking to a first-time funder and they ask them to put a model together that demonstrates business projections, they don't know what and what needs to be there and how to go about it. So you having the right skills, when you learn those things, that you know that, okay, if I'm talking to somebody that I've never, like a new business entity, the question I need to ask them, and there's a way to go about it. So it's going to be a new experience for you, and you're going to learn a lot on it because you are going to be asking some questions. There's going to be need for you to understand the business model before you can even know what to request from them. So that's how it is. And when it comes to valuing it as well, so valuation is always based on different subjectivities, but there are different methods. Sometimes they value business using future cash flow. They value business using EBITDA multiple. Sometimes they use revenue multiple. All those things. So it just depend on acceptable valuation multiple or approach that is acceptable to your whoever is funding the business. But in some business, they are generally accepted multiple. So if you have an existing business now that is a listed business, you can use them as a benchmark do some discounting and value your business based on that. That okay, my business has worth 3 times of this business, or one and a half of this business at the point in time. So all those things are things that you will need to make a decision, and also how you want to grow the business as you move forward. So that's it. But for an established business, a listed entity, like anywhere in the world, you can see their share and you can know the number of shares that they have. You know their value is available in the market every day. For a public business, so for an existing business that is not listed, because they have historical data, you can see how the business has grown, and you can see that they are also continue to there's something called CAGR, annual community growth of the business. If you look at the last 5 years, how the business has grown, you can possibly say that okay, they are going to continue to grow in that line. So that is very defendable because there's attractions to prove that they have grown in that way. Do you get? So your growth can also be attached to how the industry is expected to grow in the coming year. So let's say that the economics have said that in Nigeria or in Ghana, in West Africa, the manufacturing sector is going to grow by 5x. Do you get? You are part of the manufacturing sector, which means if you have 15% of the manufacturing sector, your 15% is also expected to grow by 5x. That can be your basis to that. I'm expected to grow by 5x based on economic data. So that one is there. So when it comes, can this rule make you to move into FISI? Yes, of course. Even though some of the time in FISI, you don't build the model, your clients build the model, you get to invest and you do more validation of the business. But having the knowledge of the model, we allow you to be able to like review the model, ask questions, carry out sensitivities and some analysis to back up the reason why your business needs to invest. So it's one of the demand skills to be in FISI. You may not be the one to build the model, but whoever you are supporting will submit a model for you for review as a investment professional. So you need to be able to know that this is what they have done and how to go about it. So, but looking at it as well, you also need to have a skill to do some analysis around repayment period, ratio analysis, all those kind of ratios that happen in finance to know that if this investment is the right investment for me. So, which means if you know how to review the model, you can know what they have done and they have put the right number together. So that's it. You asked that I think the last one is that what's your advice to get really good at modeling and foundation setup? So the advice is more like you need to do what you need to get the right training, be in the training, but you have the right tutor telling you the right thing that you need to know. So I'm also working on a project, like being involved in different projects will give you a lot of exposure, which means you can't over-emphasize. You can attend 10 training if you never get a chance to be on a project or trying to understand why those decisions are being made in business. Your skills may not be easy to put into use. So get the right skill and also get on projects. I think that's it.
Yeah, thank you very much. We've come to the end of today's section. Thank you very, very much. So before we wrap up and before we leave the call right now, I would like to tell us about our financial analytics and modeling training. We have a financial analytics and modeling training that is tailored for professionals looking to enhance their analytics capacity and drive data informed decisions. So whether you're new to analytics or looking to build on your current skills, the 3 month hands-on practical intensive program offers a comprehensive blend of practical tools, theoretical insight designed to optimize financial process and improve decision making. Then upon completion, you would have access to a 2 month virtual tax-based internship scheme that provide you with a lot of projects to work on. So by the time you're done with the training and the internship scheme and you're going to meet recruiters with a lot of things regards to what you've done. And when is the training starting? The training is starting on the 3rd of May. So it's starting next month. This amount right now you're seeing on the website is quite very discounted, and going forward, internally we are currently reviewing this amount and it will be going up soon. So I would like you to join this cohort starting next month. So this is the breakdown of the curriculum, and this is the breakdown of the curriculum. So the end goal for us is to help you to become not just a financial analyst, for you to also be able to transition to investment analyst, credit analyst, commercial analyst, financial planning and analyst. That is PF and A, and pricing analyst, portfolio analyst, treasury analyst, and a lot of things. So I would like to read more about the curriculum because it's strictly hands-on practical intensive. Hands-on practical intensive, and it runs on the 3 months strictly Saturdays and Sunday. Saturday from 12 to 3, Sunday from 2 to 5. Classes are live and we recorded. And at the end of the training, you'll be having access to the recording at the end of the training. So you get access to the recordings. For those that have signed up or that have used the in-chat section to sign up, because I said I will sign up using the in-chat section. So for those that have signed up, you will get access to the recordings at the end of today's section. So I would like to appreciate. Hi, Jude, go ahead, please. We need to wrap
Okay.
up the next few minutes.
So please, I have something to ask concerning what you just said. Means if we are to join, let's say we are to pay for the training next month. After the training will be for 2 months and
With the
an
3 month
extra
training,
2 month, 3 months training.
and there is
Um,
extra too much for tax-based projects, which would have sent a lot of projects to you to work on. So by the time you're going to repeat that, you're going with the projects you've worked on, the captain projects, and other projects you've worked on aside from the training.
okay, okay, okay. And after that, you said you likely introduce us to recruiters and the rest. Or did I get a
Yes.
power?
No, so we didn't say we introduce you to recruiters. What I said is that after you're not just attending the training to have a skill, you're attending to get a skill, to get certified, to get knowledge, and to be able to do. By so doing, you will be outstanding. Do you understand? So I had a section with the every last week.
There's so much noise in the background. There's so much
Yeah, there's so much noise in the background.
background.
Just mute. Just mute. Yes, okay. So I had a section with Mr. Quadri last week, and what Mr. Quadri told me was that Alfred, I have a lot of people that are in my DM seeking for financial analysts and financial modeler, but there are people there is no enough talent in this space. So these are things that he mentioned to me. What this means is that there is a need for this. So with the hands-on practical intensive training down for 3 months with the 2 month tax-based internship that you've been working on. With these, that's a total of 5 months. So the tax-based will just send it to you, not that we are monitoring you. We'll send it to you and you keep submitting it. We have a place where you submit this tax-based and you'll be able to build a portfolio with this to show recruiter to say, okay, you can. What I'm saying is, in essence, is that at the end of the training, if somebody go online to search for Jude at Drew, somebody go online to search for Jude at Drew, your portfolio, your name, your LinkedIn, everything regards to what you've done in the financial analytics and modeling space should be able to pop out, and they should be able to see your portfolio. Do you understand? So this makes you outstanding going forward, and getting a job in this space will be seamless and easy for you because of the high demand and the gap talent for this space. I think that's good, Jude. Hi, Ruth.
Yeah,
Go ahead.
okay. Yeah, okay.
Yeah, Ruth, please go ahead.
Okay. So you say that the program is Saturday and Sundays, right?
Yeah, Saturday, 12 to 3,
Okay.
2 to 5
Okay,
Nigerian time.
12 to 3.
Yes, 2 to 5 Sunday.
Okay. That is two hours, I mean 3 hours.
No,
So
that's 3 hours. That's 3 hours. 3 hours. But sometimes we might not use up to 3 hours. Yes, because it's strictly hands-on, we need to flow. We need to be able to do it as we learn it.
okay. Thank you.
Yes, and what I'm going to reach out to you later today or tomorrow to discuss further things. Yeah, so thank you everyone for joining today's
All right.
section. We've come to the end of today's section. So thank